Hi everyone and welcome to Symax Fintech Weekly Market Insight. As usual, it's broken into four parts. So let's start with part one, where we look back at last week and what moved the markets. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice, we're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. Okay, so when we look at the highlights, before we get into the data, let's sort of just take a little look at what really did happen. So the dollar was weaker on Tuesday after that data come out, the inflation data, CPI in the US, but everything else had a big rally. And then WTI had a sort of a steady week. It did come off initially. It got down to sort of 73, 72s again. But on Friday it rallied $3 to finish around about 76. And stocks held up, especially on that massive rally on Tuesday, and they didn't really give that back. And gold had a sell-off earlier, and it sort of touched that 1935 level, but it closed the week stronger and it almost touched 2000. So let's have a look at the data. So in the US, yes, we had that CPI come out at 0. So that's only month on month, of course, which when we look at that is 3.2% year on year. Now the core was up 0.2% month on month, which is 4% year on year. And then of course we had PPI as well. So with the PPI, that was negative. That came in at negative 0.5% month on month, which gives a 1.3% year on year. And the core itself came in at 0. That was expected at 0.3%, and that's on month, obviously, and then 2.4% year on year, when it was expected to come in at 2.7. So that's sort of what really kick-started the week last week on Tuesday. Then we had retail sales coming in. So that came in at negative 0.1% when that was expected to come in positive. Negative at negative 0.3. So again, a little bit better than expected there. And then when we move on to initial jobless claims, now they came in a little bit higher. They came in at 231. They was only expected to come in at 220. So, again, we're starting to see just a little bit more with the way, sort of, not really seeing too much in the way of less jobs, I suppose. But, companies are starting to shed some staff slowly. But, I expect that to pick up pace, as I've been saying for a while now, next year. Then the Philadelphia Fed came in at negative 5.9 when it was expected to come in at negative 9. Capacity utilization was lower, came in at 78.9. The expectation was 79.4. So above 80 is growth. So it was on its way there. It had been moving up, and then so yeah, that's a little knockback there. So you know, people say below 80 is contraction, but I don't think so. You know, it's only a little bit below. For me, if it's 75, 74, yeah, that's not looking so great, but just 1.1 away from that is not too much. Industrial production came in at negative 0.6%, but it was expected to come in negative 0.3%. So again, you know, manufacturing still having a little bit more of a rougher time. And the housing data came in just slightly better than expected. So then if we move on and take a look at what happened in the EU, so GDP came in negative at 0.1% quarter on quarter, and that's so that was a negative 0.1% quarter on quarter, which is 0.1% positive year on year. ZEW came in at 13.8%. Industrial production was negative 1.1%. That was only expected to come in negative 0.7% month on month. And it came in negative 6.9% on the year. And that was only expected to come in at negative 6.3%. And then, of course, inflation data. So CPI, the core came in at 0.2% month on month, in line. And then that gave us 4.2% year on year, again in line. And then the harmonised came in at 2.9% year on year, again in line. Moving on to Germany, so the ZEW came in at negative 79.8. That was expected to come in at 76.7. So again, a little bit of a lower number there. And economic sentiment came in at 9.8 when the expectations were 5. Okay, so moving on to the UK, there was a little bit of data out there as well. House prices still not sort of so great. They're still just coming off a little bit. And of course, you know, once people come out of these fixed parts of their mortgages and they've got to pay higher rates, you know, is that going to encourage more selling? We'll have to wait and see. Okay, so then of course we also saw that, you know, on the year they're negative 1.3%. Right, where should we go? Average earnings. So average earnings came in at 7.7%. If you include the bonuses, it came in 7.9%. So again, that growth is still there. That's going to keep a bit more pressure on inflation. Unemployment came in unchanged at 4.2%. Okay, so again, let's have a look at some inflation data. So CPI came in flat at 0 month on month, 4.6% year on year. The core came in at 5.7% year on year, which was lower than expected. So moving on to PPI, the core there month on month was 0.1%. And year on year that's 0.2%. So again, you know, what producers are paying is very different to what consumers are paying there. CPI is consumers, PPI is producers. Okay, moving on to the retail sales index. So that was negative 0.2% month on month, which gives us 6.1% year on year. That was expected to come in at 6.4%. And the retail sales themselves came in negative 0.3% when it was expected positive 0.3%. So a little bit of a turnaround there month on month. And that gives us a negative 2.7% year on year when it was expected to come in only at negative 1.5% year on year. So sort of, yeah, so shops are suffering a little bit there. Consumers not spending quite so much. However, obviously we're nearing Christmas now, so I would expect to see shoppers out there in force preparing for Christmas. Okay, so moving on to Australia, business confidence was negative 2. Wages year on year 4%, which was higher than expected. Employment was up 50,000 when it was only expected to be 20,000 higher, and unemployment rate was still 3.7. So again, creeping up, but just really slowly. So looking at New Zealand, food price index was negative 0.9% month on month. Retail sales was negative 2% year on year. And then if we look at PPI, so they like to do theirs quarter on quarter. So that was 1.2% quarter on quarter, which that's for input, and then for output that was 0.8%. Moving on to Japan, GDP came in negative 0.5%. That was only expected to come in at negative 0.1% quarter on quarter, and that gives an annualized at negative 2.1%. when expectations were negative 0.6%. So again, a bit deeper on the downside there for GDP. Moving on to China, and new loans were 738 billion when the expectations were only 650. And industrial production was a little bit higher than expected, it came in at 4.6%. Retail sales, they sort of was a beat. They came in at 7.6% when they was only expected to be 7%. And then finally Canada, industrial production was negative 1% month on month. So yeah, some interesting data, and you know, well, it's nice that the markets were sort of looking a lot more at the data that was coming out rather than the geopolitical situations. But you know, again, I'm sure there's lots and lots of phone calls going on in the background that we don't know about. Okay, so hopefully we'll see you in part 2. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, you know, if people are looking to get into trading, then our sort of introduction to trading is a great one, trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1-week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And you know, if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, you know, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging FX and commodity exposure. And then of course we provide you know, a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, you know, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby@Symax Fintech. Go back to that one, christubby@symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.